Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin and discuss whether it can hold the line and what that means. If you guys like the content, make sure you subscribe to the channel. Let's go for 400,000 subscribers. Give the video a thumbs up and also check out the Telegram channel, which you can find a link to in the description below. If you want to know how I'm navigating these markets, check out the sale on the premium list. You can find a link to that in the description below as well. And if you go to the website, it'll give you a preview of it as well. Finally, we did get some new shirts in the store. A lot of you guys were asking for What's a Few Trillion Among Friends t-shirts. So if you're looking for one of those shirts, make sure you guys check that out in the description below as well. Let's go ahead and jump in. So the current price of Bitcoin right now is 48,450, and the 20-week SMA is at 48,643. So some people may say, well, it already didn't hold the line. Well, the first thing we should say is that wicks are not a problem. Okay, wicks are not a problem. That doesn't really make a huge difference. If we get candles closing in this area, that's where it becomes, I don't want to say an issue, because I don't think it's really an issue in the grand scheme of the cycle. Even if we come into this territory and then sort of come back up later on, sort of like we did over here in 2019 and 2020, I don't think that's really an issue. But in terms of the health of the altcoin market, you might want to know, where Bitcoin is with respect to its 20-week moving average. Now, remember, a lot of the things we discussed, the first one was the wick does not matter. The second thing to keep in mind is that the bull market support band is made up not only of the 20-week SMA, but also the 21-week EMA. So we have a little bit of wiggle room. A lot of people prefer the 21-week EMA over the 20-week SMA, but they more or less provide a similar area of support to maintain the integrity of the bull market and make it so that altcoins remain relatively bullish, okay? Now, the 21-week EMA is all the way down at 46,595. We, in fact, already had a wick below it when we had that brief sell-off a few days ago. Now, in order to understand the importance of both of these moving averages, I think the best thing to do is just go see what happened before, okay? So if you go back to the last cycle, you'll notice that the 21-week EMA mostly stayed above the 20-week estimate for the entire cycle, and it wasn't until the very end when they crossed that we had the 85% drop or 80 to 85% drop. There were other times when we did cross. Here was an example of a cross where we actually held the 20-week as support, and we never went down to the 21-week. We held the 20-week as support even on wicks on the daily time frame. We didn't even go down to the 21-week EMA. There was a time here as well, though, where we actually did have closes just below the 20-week moving average. But what you'll notice is that they were in fact above the 21-week EMA. Okay, so they were above the 21-week EMA. And also remember too that these closes and whatnot will also depend on the exchange. Okay, so this is just the one we're looking at. We're looking at the Bitcoin index that goes all the way back to 2010. So I would say we want to hold the line ideally above the 20-week SMA, ideally above the 20-week SMA, if you want to see altcoins remain relatively bullish. If history is any indication, though, it is possible for us to go slightly below it, and as long as we're above, say, the 21-week EMA, it's still relatively fine, because a lot of people use that to navigate whether we're still very bullish or not. So again, that's why we have a bull market support band. There is a little bit of tolerance on it. The 21-week EMA is currently at 46,598. The 20-week SMA is currently at 48,644. We did say a few weeks ago that normally after having a cross of the 20-week SMA and the 21-week EMA, we usually get a test of the 20-week SMA within a few weeks. You can see that has played out again. Okay, we had a cross, and then 3 weeks later, we're now testing the 20-week moving average for the first time since September and October of 2020. Now, the other thing we've discussed, as you guys know, is this cycle looking more similar to this one over here. And this is a phase where if we do get weekly closes below, this is a cycle that showed that it didn't actually mean we were heading all the way back down or anything like that. And that's why, this is one of the reasons why I keep saying I do think there are some similarities. Obviously, they're not identical, but there are some similarities between our current market cycle and this one over here. Remember, the last cycle was a systematic test of the 20-week SMA every 2 or 3 months, and we didn't really veer from that too frequently. Okay, we just kept testing it every few months. This time, though, you can see that from the time we left it to today, it was about 224 days or so. Similar, very similar to, in fact, what happened in 2013 when we left it here. You might actually say we actually left it here, and then we came back down to it over here, about 224 days. So there are a lot of similarities, again, between this cycle and 2 cycles ago. Now, one thing we should say, though, is that if you look at 2 cycles ago and this cycle, okay, so let's take a bar pattern, and we're not even going to do all of them. We're just going to take 2 cycles ago and compare it to the current cycle. So that's from the bottom. If you want, we could also shift this over to the capitulation of March. You can see it actually does line up relatively in a similar fashion. And if you took it from that capitulation in March, Bitcoin is actually ahead of where we were in 2013. However, in order for us to keep pace with where we were in 2013, we would need to go to $565,000 this August and $2.7 million by March of 2022. Obviously, I don't think that's going to happen, which is why we talk about diminishing returns. Okay, diminishing returns is not a bad thing. In fact, understanding it, I think, is a good thing in terms of trying to navigate each cycle and not thinking that it's probably going to go higher or it's not going to go quite as high as you might think, just because people are saying that it's going to go there on crypto Twitter and crypto YouTube. So one thing, though, is if we go look at this from, say, like the bottom, we can recognize that a lot of parts of this are taking longer in terms of getting to say the market cycle peak. If this were 2013 from the bottom, we would have already hit the peak in January of 2021 as measured from the bottom, because you can see this 2019 move was keeping pace. Ultimately, we fell below it. Okay, and we've moved back up, but we're nowhere near where we were at this point from the market cycle bottom in 2013. And so if we are going to emulate this type of a move and we do come back down, it might last more than a couple weeks, because everything else about this cycle compared to 2 cycles ago has lasted a little bit longer, okay? Because again, if it were the same as 2 cycles ago, we would have already seen our peak, and if it were the same as 2 cycles ago, we would have already seen our first peak as well, okay? So we would have seen the final peak, we would have seen the first peak if it was the same as 2 cycles ago. I'm sort of looking at this and saying, to me, there's at least a non-negligible chance that we're sort of emulating, in some sense, this thing right here, where we came back down, this peak up here where we came back down. Obviously, at the end of the day, every cycle is going to have its own unique characteristics, and they're not going to be identical, okay? There's plenty of other things we can do to look at theoretical projections. But anyways, that covers the 20-week SMA and the 21-week EMA. Remember that Bitcoin holding the 20-week SMA or the 21-week EMA can often be a months-long battle, even in the event we hold it. I would argue the longer we hold it as support, the more likely we are to bounce off of it. If we just go to it like in 2019, and you look at 2019, we sort of went to the 20-week and we first tested it here, a wick, and then the following week we fell below. If something like that happens, then I would probably be a little bit more bearish in the short term, okay? If, on the other hand, we have a scenario play out where the 20-week sort of does something like this, and we're just riding that 20-week for a few months, then I probably would get relatively bullish on Bitcoin at that point. But in terms of a test of the 20-week, I think we have a long ways to go. Remember, too, that just because we bounce off the 20-week does not mean we're out of the woods, as just last week we had a bounce from 47K, or a couple weeks ago we had a bounce from 47K back up to almost 60K, and then this past week we just came right back down. So these battles of the 20-week, they can last for months and months and months. especially in the event that we hold it. Now, not all of them last for months, as we looked at last cycle. Some of them were just 2-week tests. Some of them were, but some of them lasted for 2 or 3 months. And this one over here that we had earlier this cycle lasted for approximately 6 weeks. So we know that they can drag on more than most people want, and it leads to sort of a, I don't really want to say a nail-biting experience, because I think as long as we set ourselves up to capitalize on whatever happens, it's not really that big of a deal. Okay, it's not really that big of a deal. But anyways, right now, if you look at monthly candles, we have come back down a little bit. We've come back down. These are monthly candles back down to the 20-week SMA. Again, there are some similarities between 2013 after several moves up in a row, followed by a couple monthly candles back down. Again, though, I wouldn't take that to the bank. I wouldn't take a two monthly candle pullback followed by another major move. I wouldn't necessarily take that to the bank. I would say there's also a decent chance we get more red candles as well, before necessarily moving back up decisively. Okay, we've moved up relatively quickly, and there's nothing wrong with some consolidation at the very least. And if we dip and then go back up, nothing wrong with that either. I think if we did do that, it would represent a really nice opportunity, especially for people who are sort of feeling like they missed out on this market cycle. If it does go back down, that will probably be your opportunity. If it doesn't, then testing the 20-week for a while could present an opportunity as well. So hopefully this video was informative. Obviously, we'll look to see. We're going to get a weekly close tomorrow in about, well, I guess from the time that I publish this video, it might be about 25 or 26 hours from the time of publishing this video. So keep an eye on whether Bitcoin can close above the 20-week SMA, which again is at, if we go look at the 20-week SMA, it's at 48,639, so about $300 higher than where we currently are. And at the very least, we would like to close above the 21-week EMA, which again now is at $46,590. If you guys like the content, make sure you subscribe to the channel. Let's go for 400,000 subs. Check out the premium list. You can find a link to that sale in the description below. And remember, if you wanna What's a Few Trillion Among Friends t-shirt, check out store.intothe.cryptoverse.com, and you can order one of those t-shirts. A lot of you guys were requesting one of these, so we have this made, and hopefully you guys like it. That'll wrap it up for the video. Thank you guys for tuning in. I'll see you next time. Bye.